Hey guys, welcome back to my YouTube cryptocurrency channel where I talk about coins, ICOs, crypto news, and I'm just now starting to kind of throw in some technical analysis in there. I'm not an expert by any means. If you watch my last video, it's really basic. I went over the RSI, which is kind of like showing overbought, oversold. Today I'm going to cover two indicators. Don't get fooled. I have three indicators right now on my chart, but I'm going to take one off. I'll explain why I have it on there. But I'm going to cover two indicators. Because I was sick this week. It was the first time I've been sick in, I want to say, almost 2 years. I was in bed for 2 days, exhausted. I really didn't want to make a YouTube video. I made 51 videos in 51 days. I took a break and I started researching more indicators because I'm really curious. I want to learn more about technical analysis side of trading. I do more research on coins and teams, but I don't really understand the swing trading, day trading as much. So I started to sit down and thought, it'd be kind of interesting to see if I could find on my own some indicators that I felt would have given me a warning sign before the Bitcoin crash occurred. And so that's what I think I kind of found, and I want to explain why I think I found it and what you could, how you could use it to your advantage. And obviously somebody who has a keen eye or is a veteran at these things, they're going to understand how to explain these better than I will. So if you want to take it to the next level, go search some more YouTube videos on traders. It doesn't even have to be crypto trading. Just stock market trading is where I would personally begin because it's the same concept with the indicators per se. And what I've always been told is don't clutter your charts. Pick 1, 2, maybe up to 3 indicators and kind of keep it simple. Don't complicate it. Well, for this video, I'm going to keep it to 2, even though I have 3. I'll explain here in a second why I have 3. So the two specific ones I'm going to cover today are the stochastic RSI, which is this one right here, and the MACD. I don't know why they call it the MACD AS. I think in the source code it might explain why, which is this one here. And I'm going to delete this one out here in a second, but I put it there for a reason, and I'll explain here. So first and foremost, I'm going to do a quick nutshell, in a nutshell definition of a stochastic, of an RSI. Again, I'm not a financial advisor. I don't swing trade. I don't even day trade. I don't even do any of this stuff yet. I'm just doing my research and then I'm presenting to you what I research because I'm a long-term hold guy. I'm a hodler, but at the same time too, I would like to at one point play with the market. If not the crypto, even maybe the stock market at one point, but crypto's my first love, so let's stick with that for now. So let's go ahead and go to the definition of, well, the RSI first and foremost is really just, in my last video, it's just an overbought, oversold. So you'll have lines. If you see here, you got an 80-20. A lot of people also for the RSI will use like a 70-30. And essentially it's like an overbought, oversold concept. So you would have something like this here. Excuse me. I'm still kind of sick, so I apologize. If this is the RSI here, you have the 70, you have the 30. Down in here it's saying, hey, there's been an overselling. The price tanked, you can see here. It oversold. Therefore, right in here, when it crossed that 30 again, which is going to be somewhere in here, they're saying now might be a decent time to buy. And again, these indicators are just that, guys. They're not a crystal ball. They're just looking at past events, trying to predict maybe what the future could hold. But you honestly don't know. So, you use your brain. Don't invest anything you can't afford to lose. So that's roughly the RSI in a nutshell. Up here, you would have the overbought right in here, and it's saying, hey, warning, when it drops below this 70 line, potentially, maybe now is a decent time to sell. Of course, you can see it flirted with these lines in here. Maybe right in here went over, maybe right in here went over, but it didn't have a definitive, clear, break through the line, stay above the line, come back down. So that's the concept of the RSI in an extreme basic beginner nutshell. You would buy in here, you would sell right in here when it drops down below. Of course, a lot of people too like to look at, making sure that there's a pattern rather than not just like it just doesn't go down, just barely, and you're like, oh, I'm out. You want to make sure that there's a clear picture of, however long you want that to be, however many candlesticks that might be, how many hours, days, whatever you're comfortable with, depending on your trading style. If you're more risk adverse, that's one thing and you could, whatever, but it's up to you. So the stochastic is similar. You got the 80 and the 20 in here, but then you have these two lines, it's the K and D, and the moving between the K and the D. So the K in this example is the blue line, the D is the red line, excuse me. And what it's saying is right when they cross right in here, there would be a time to enter. And then right in here, where they cross again, they're saying it's a time to exit. And then you could go in here, but this is also what they're saying is you want to wait till it's a under the 20. So you're basically waiting for the cross, not in here, but you're waiting for it to occur under a 20 or above an 80. So that, in a nutshell, is for the stochastic. If I want to go into the definition of the stochastic, it's, how do I close this advertisement? I don't want this. I think I can still read this here. So basically it says the stochastic oscillator is a momentum indicator comparing the closing price of a security to the range of its prices over a certain period of time. The sensitivity, let me do one thing right here. I was getting a phone call and I turned my ringer off. The sensitivity of the oscillator to the market movements is reducible by the adjusting the time frame period or by taking the moving average of the result. And really, I mean, yeah, you can go in all the definitions and understand all the formulas about how everything works. I'm not going to go any of that today. Really, I'm just going to show you what I found on the charts, what I looked for, and I said, you know, if I would have been using this and if I used it enough to start to have an eye for certain things, I might have been able to catch, you know, a trend ahead of time. That's all this is for. Maybe you could have caught this ahead of time. So let's now look at the one I'm going to talk about is this one mostly here because it's the stochastic RSI. So it's a combo. And what is that? Essentially, it's this. The stochastic RSI is the indicator, stock RSI, I think that's how you pronounce it, stock, is essentially an indicator of an indicator. The inception, it's going deeper. It's used in a technical analysis to provide a stochastic calculation to the RSI indicator. This means that the measure of RSI relative to its own high or low range over a user-defined period of time. The stochastic RSI is an oscillator that calculates a value between 0 and 1, which is then plotted as a line. The indicator primarily used is for identifying overbought and oversold conditions. So it's the same kind of concept, the oversold, overbought, and where do you get in, where do you get out. And as you can see here, you have the 80 right in here on this line. You have the 20. And then so basically when you have this crossing in here, and right when it dips, if you can see in here, it actually starts to turn red. Again, it's not perfect. And it would say right in here, maybe it's time to sell. You come back in here and you say, okay, maybe it's time to buy, and you buy. Now you could have done a, you know, you could have maybe sold in here, but there wasn't a crossing. So it's really saying don't. It's saying to wait. You can see a momentum that it actually didn't come all the way back down again. It kind of stopped midway through and kept going up. And now it's saying, hey, watch out, it's crossing, and boom, sure enough, there's a drop. And so you can keep on going. If you want to get more like detailed definition, I just went to TradingView, their wiki page, and it goes into all the different definitions of specifically what it is. It shows you entry points, right where the crossing is, when it hits the 20. Right where the crossing is, then when it hits the 20. Same exact thing, entry points, crossing, when it drops below the 80. It's pretty straightforward. You kind of get the concept. So I guess this picture actually is kind of pointless because I just covered that, so I'll go ahead and drop that one out. And this one here, all it does is show, if you just had the RSI, it shows one point in here where you would have sold, or it's kind of warning you, and another point over here where it's saying, hey, get in. The difference between the RSI and the stock RSI, so stochastic RSI, there's a lot of different or additional points to get in and out. So it's more active, if you will, this one compared to this one. Again, it's whatever your trading style prefers. Okay, so I know that was kind of a long lead up to get into the actual point of this video, but what I did is I opened up Bitcoin here. This is Bitcoin. I did the USD just because it's easy to see the actual all the way to the right. You'll see right in here, this is the actual pricing in USD for people, so it just keeps it simple. Up at the top here, you have about 20,000. Right in here is roughly where it hit. And then down in here is where, you know, you have, I guess where the runs kind of started at 5,700. And then kind of, it's on the daily chart, almost day after day after day, it went up. So if you look at this one here and this one here, these are my two. Let me push this one up here. Okay. So these are my, let me go back. And I'll push this one up again. So if I look at this MACD one, and I'll tell you exactly which one I use on this one. This is the MACD, but this is the one made by this guy, Danube, D-A-N-U-B-E, and it's called the MACDAS by, well, I guess it's, okay, plots by this guy, and then alerts by this guy. So if you're looking it up in TradingView, you're going to have to go to indicators. I would just type in MACD. I've saved it as one of my favorites to keep it simple. And then I think it's, can I type in his name? No, I can't type in his name. So it's going to be the one, I think, by the Dan B, which I don't even know if I see it in here anymore. Let's see. Let's type MACDAS. Oh, there you go. I was an idiot. So it's going to be this one right here. This is the one I'm currently using. And you can use any one you want. This is just the one that I found. I liked the way it looked. It was very simple, easy on the eye, etc. And this one right here is a basic one that's already tied into, I think it's a built-in, tied into TradingView, which is this one right here. Yep, there you go. So those two right there. And here's my lead up on Bitcoin. Now, if you see in here, basically these arrows are telling you or trying to say, hey, maybe it's time to buy, maybe it's time to sell. It's not perfect, but if you look at the daily charts, so it's saying, you know, buy, sell, buy, sell, buy, sell. But your real momentum or movement up and down volatility in Bitcoin didn't really start. I mean, yeah, you got it in here, but this is the real hockey curve, if you will, right in here. So it's saying, okay, this blue is saying it's moving upwards, growing, it's growing, it's growing. Yes, you have fluctuations on the hourly and the 4-hour chart, but on a daily basis, for the most part, you almost have every single day a green candle. Now, if you look in here, right in here, we would have basically off of this indicator, we would have said, okay, we've made the crossover. Now we're going to buy probably right in here. And if you look, it's about the same equidistance, you know, or same time frame as you would have used if you would have used this MACD indicator. Same thing down here at the MACD crossover here. Now, the reason why I left it on here, and I'll take it off in a second, is because if I would have gotten up in here, so now let's say at one point it did hit 20,000 right in here, okay? And that's, actually, I didn't even notice this before the video. So at this very point right here, oh, by the way, real quick, I did not touch, I don't think I did. In case I did, I'll double check. 12, 26, 9, reset default. No, I didn't. Okay. These are the defaults. I left all these indicators at their default levels. You can play with any of these, whatever you want, but I left them at defaults. So right here where this crossover occurred, now I know I talked about, they say, you know, to keep it, I guess for a safer bet, to make sure it's not just a hiccup, you know, not just like a oops moment. They say kind of wait till it crosses over. So in theory, this is the point where it would have warned you and said, hey, watch out on this one, okay? So that would have put you at roughly right in here. After the blip, let's say you sold at the worst point, that would have put you at selling at 13,600, okay? But if you would have actually done it right on the crossover, you could have maybe sold at closer to 20 grand or somewhere in here, you know, right? Okay. But all of a sudden, this gave you a warning. The reason why I left this one on here, the regular MACD crossover, the warning doesn't actually come in till right here. Now, it is at 19,000, but if you look at it, now you're going, okay, you know, here's the deal. Should I stay? Should I not? Is this just a blip? I'm going to give it another day or two, right? Because usually that's what people do. They kind of give it another day or two. Well, look, drop, drop, drop. Every single day after that is almost a red candle. They're not totally all red. This particular one, I think, yeah, when I turn this off, the colors of the candle changes. It's part of the it's part of how the style is set up. Let's see if I can turn that off. There we go. Okay. So this one warns you a little bit late, if you will. And I was trying to find indicators that gave me a nice run-up, a nice warning ahead of time to say, hey, be careful, something might be coming. And that's why if you look here, this would have been on the 7th. And so December 7th, after it had a massive run-up, it went, oops, be careful. Somewhere in there, or maybe the day after, maybe December 8th, it said, be careful, things are moving in a different direction. This one did not. This one, you know, yes, you could say, well, there's a blip downward, but it's still a pretty big spread. They're not very close together. They haven't crossed over. now all of a sudden on the 9th, it's done a crossover and saying, hey, watch out, be careful, okay? Still nothing down here. If you look at this, it's now, the blue is starting to shrink. It's starting to get closer and closer together, which is a warning sign to say, hey, something's happening here. Maybe you should be cautious. Again, though, it's still blue. It's still blue. Now we got into the oversold range. So this is a very interesting thing, okay? But all of a sudden now you have, it's getting into red, the negative. And so now you get a real warning. Even if you didn't take it on this, and you get a warning in here, and even you're still taking profits in here. You're still profitable because let's say you got in anywhere in here, you're still profitable. But this is a definite nice warning sign. So you had the warning, let's say on, I'm going to be nice. I'm going to skip the 7th because not everybody would see it right away. I'm going to say the 8th. So you had, let's say 8 to 9. So 1 day, 2 days, 3 days, 4 days, 5 days maybe before this hit red, and if you want to confirm it, 6 days, and if you wanted to super confirm it because you're like, well, it's only been a red 2 days, now you're looking at 7 days before Bitcoin really started to tank, right? Okay, if you look over here, you wouldn't have even gotten this warning until this day. So that's the reason why I want to show you the difference between why I was using this MACD over this MACD. So I'm going to go ahead and just get rid of that one so it's easier to see. Okay. What you can also do is you can look at what's called a divergence. Now, again, I'm really new to this stuff, guys, but I'm trying to learn all the terms and everything. And the divergence is basically saying this. If you look at this trend right here, I can draw one. There we go. If you look at this trend, you can start to see it's moving down. Oh, did not mean to do that. See, look how new I am, guys. How do I get my chart back? I don't know what I just did. Hold on. That didn't do it. How do I go back? Midway through the video. Killed it. Okay. Let's do this again. Okay. Get rid of that one. Kept this one. Let's go back to here. We're on the 4-hour chart. We want to be on the 1 day. Bear with me, guys. I apologize. Okay. Let's put this one back up. There we go. Just like we had it. So you can see the trend line. Let's do the trend line real quick. You got this trend line downward. You got this one definitely dropping. But yet this is going the opposite direction. This is going up. This is going down. This is definitely going down. And this is going up. So what is this telling us? This is what's called a divergence. And this is why I think we could have easily seen, if we would have been studying these indicators, or at least had a better opportunity to possibly sell out early enough to get out and be comfortable with our profits without having to wait till we hit somewhere in here and go, oh, okay, fine, I'm getting out. And this is why I'm saying, if you look at this downward trend is the complete opposite of what's happening here. Whenever you see a divergence like that, meaning the opposite of the price, the indicators are saying down and the price is going up, or the price is going down and the indicators are saying going up, usually that's somewhere where you want to try to hop in. Again, it's not perfect. It's never perfect. But this will allow you to see unique positions and situations. Again, if it was the flip opposite, you could go in and say, hey, things are moving in this direction. So here's an example of the opposite of divergence. This is moving up, this is moving up here, and this is moving up. So that's a normal flow. This is not a normal flow, and this is a warning sign. So I think we could have definitely used these two indicators to at least given us a heads up to say, hey, be cautious, be cautious, be cautious. Well in advance. I hope I made that very, very clear. And in fact, I'll just even go into, let's say, Z Classic. I think I looked at this one too earlier. I did it by the dollar just for the kicks and giggles because I know it's just easier for people to understand the whole dollar concept. This one's an interesting thing though, and it throws it off a little bit when it comes to the divergence and convergence. So you got the start here, the buildup was crazy. This one built up really fast, shot to the moon, super, super quick. But right in here, you had, okay, this is a prime example of why you still have to be careful with indicators, because like the last one definitely gave me a positive, here's a divergence, price is going up, the indicators are going down, like, you know, watch out. This one is giving me a positive growth. Now it was a positive growth, and it didn't tell me to get out roughly until there already had been a downward, you know, price push. So you could have gone up to, I don't know, 275, and then if you got out, let's say on the close, that would be 160. So $100 drop is a pretty darn big drop to lose. But this right here kind of started to give us a warning. This started to go downward, and even if you got out in here, you would have lost out on some of this profit. But this was already pushing in this downward direction, kind of showing us, hey, this is pushing down, but this is going up and this is going up. What does this mean to us? You know, maybe we should keep a close eye on things. And especially, guys, like, I don't even care, honestly, if this is going downward, or just regardless. Let's just say we don't even have these indicators on here. If this shot up this much, which I think this did it in an 8-hour period, if I remember correctly. I remember watching the actual charts that day, and I think it was within 8 hours, it went from like, well, I'm going to lie to you now. So that's 111 to 220. So it doubled. It basically doubled within one day. Guys, take your profits. Be happy that you just straight up doubled your money. And on top of that too, if you look here, this was on 12/26 and this was on 1/6. So you're looking at, let's see, how many days ago? This is 5. You're looking at 11 days. You went from $10 to, at one point, 220 up to 270 in 12 days. Just, you can't ask for something better than that. So again, I think this is important to show. They're not perfect. I'm not going to show you every single graph that's like showing you identical. Hey, just use these two indicators because they're perfect. And I'm going to show you, you know, everything on my YouTube channel that looks perfect. Like, no, I want you to see that this one was going up and there was profit in here, but this one here was giving you warning signs. So again, they're not the perfect indicators. And I know I didn't go into like all the utmost details about what these indicators mean, but I seem to find that between these two, they for me personally, the coins that I've looked at, you know, they've given kind of interesting indications ahead of time about getting in and getting out. Again, I mostly looked at the day charts. I didn't look at the 4-hour, 1 hour, you know, whatever, and you can dive into those. But I would just go ahead and give these two a look and see how it might help you out. And also, too, I would actually love to hear which indicators you guys really like if you day trade or swing trade, and tell me which ones that you prefer that you've done well with, because I'm personally still trying to learn. Also, if you guys prefer my coin reviews over this style where I'm going to TA stuff, again, it's really basic TA stuff, let me know. If you guys prefer this over the coin reviews, let me know. Either way, I'm still going to provide videos, maybe not on a daily basis because I'm super, super busy. I'm still kind of sick, but I don't want to totally leave you guys hanging. So thanks again for watching. I appreciate it. If you liked the video, please give me a thumbs up. If you did, and subscribe too if you could. If you disliked the video, please give me a thumbs down and please explain why, the format, the style, what I talked about, whatever it is. Just let me know, and you know, that way I can fix the videos for future videos to come. Thanks guys. Hope you're having a great weekend.